Hi, everyone. Today, as Amy indicated, I'm pleased to be hosting this session entitled Responsible AI Tech Startup Journey and Funding. I'm Hessie Jones. I'm a venture partner at Matter Ventures. I'm also working at Altitude Accelerator here in Toronto, Canada. And I'm pleased to host both Jennifer Jordan, who is a venture partner at iGlobe Partners, who's a seasoned investor, and Patricia Thaine, who's the CEO and co-founder of Private AI. So before we get started, I'd like to welcome both Jennifer and Patricia to introduce themselves. Why don't we start with Jennifer?
Hi, I'm Jennifer Jordan. I'm very glad to meet everyone. I'm an early stage investor. I'm currently a venture partner with iGlobe Partners.
So very happy to be here. Thanks so much for having me, Hessie. I'm the co-founder and CEO of Private AI. We are a company that is building the privacy layer for software. And I come from a background in doing research in privacy preserving natural language and spoken language processing. And it became really obvious that privacy not only was really important for people to be able to have more control over their data, but also for companies to be able to create better products.
So we are amid this economic downturn that's going to spur a lot of investors to reduce risk in their portfolios. And so previously we experienced this this bubble in the VC space where market was good, VCs were spending like crazy, and they're investing even in ideas, and sometimes, as we see, not doing proper due diligence. So we also know the crypto winter is purported to be in the horizon, and there are many tech companies, as we heard from last session, that are experiencing shutdowns or layoffs. So what does this mean for startup founders who actually have planned to do raises this year?
Yeah, I think a couple things. The first thing is, remember that what you're building, the value of your company, you need capital, but it's really about the value you create for customers. So the more you can turn your focus to getting to product, getting to customers, creating value for them, the stronger a position you'll be in to raise from the get-go. That said, if you have already raised and you're thinking about raising, this is really a good time to do your homework and set a plan that's sort of the best case, worst case, and middle scenarios so that you feel prepared and that you can take action with enough time if you need to. And also, investors are going to be looking for founders who have taken those steps in advance, right? Because it represents that you understand what the headwinds that you're moving towards. If you have the capacity and the milestones and the support right now to get capital on your balance sheet, I would drive to do that. That's just my opinion. It's, been 3 years in this game. And whenever someone says, well, we're really just thinking about here, I think, okay, drive to that. But if you have the capacity, start thinking about getting a little extra cash on the balance sheet. One of the reasons people are pulling back right now is they don't really know how severe this might be or when it will really hit. So they're just being a little more cautious. That said, deals are getting done. People will fund the companies that they believe are bringing the strongest value to customers, have the opportunity to win the market. And that's what you want to focus on.
Okay, one more thing about, yes. Can you address the topic about valuations? Because as we know, valuations was kind of one of the critical things.
So just the way that investors watch this and what's really happening is you have in the public markets, valuations coming down substantially, especially through the first quarter. In some cases, tech is down 30, 40, 60%, depending on the company. So this is a very strong pullback in valuation. That trickles over to the private markets because in the later stage companies, the multiple of return that investors are looking for is driven by what they can get in those public markets or from a buyer. So that starts this little bit of a waterfall effect that you have a pullback in the public markets, a pullback at the growth stage. Now it's trickling down into Series A and Series B valuations for some companies, and it will hit eventually the seed and pre-seed stage. right? If we keep on this trend until people feel like they know where the bottom is. So I would be prepared just potentially to, not to fight over a few points in here, right?
Okay.
Especially when people are talking about pullbacks that could be 30%.
Okay,
right?
perfect.
Don't
Thank
be
you so much.
twee with valuation in a down market.
Great advice. Okay, so I'm going to turn to Patricia. You are a startup founder. You've successfully raised your seed round, so it's great. So, but you've built a solution that helps mitigate privacy harms using natural language processing. So I want to hear your story. Like, how did private AI come to be?
So it all started, version 1.0 started when thinking through exactly the thing that I was mentioning before of companies need access to more data. There's privacy as a major problem in getting them access to that data, but also as a major problem with regards to maintaining customer trust and the ethical value of privacy as well. So how do we make all of these worlds come together to get companies access to more data without infringing on customer privacy? We started version 1.0 of private AI back in 2017, which was a combination of homomorphic encryption with NLP to do semantic search on encrypted data. Essentially, homomorphic encryption allows you to perform computations on encrypted data, and then when you decrypt it, the value is the result of those computations. Like 2 plus 3 is still going to be, the result's going to be 2 plus 3, going to be 5. It was pretty obvious that that was not going to scale. So I scrapped the idea. In 2018, I did some more research. In 2019, I started looking at what the market really needed. And it was through thinking about if I were to build something like Grammarly, something on top of email, something on top of SMS, or any sort of unstructured data, what kind of tool would I need in order to do that in a privacy preserving way? And everything required this layer of privacy that just didn't exist on the market. And the more people that I spoke to, the more I realized this is something that they were building in-house, or something that or the privacy of the data was a reason why they weren't touching the data in the first place. So needed something built in to suit their needs. And in a lot of cases, they couldn't use third parties because they couldn't send their data to those third parties because that's against the contractual obligations they had with their customers. So wanted to build something that was really generalizable, really modular, really easy to integrate, and really targeting developers because they need that flexibility to put privacy anywhere they want in their software pipeline.
Okay, perfect. Thank you for that. And I think you're a beacon for what's happening today. And I think later on, I'd like to be able to touch on where this is all going in the responsible tech side. So Jennifer, you're in front of a bunch of budding or female founders who actually want to get more into like either developing their own companies, or they are in the midst of, let's say, fundraising. So what is your advice to female founders, especially when it comes to fundraising, overcoming, let's say, gender or age bias, specifically in the tech space?
I guess first, let's be upfront. You're going to find it and you're going to encounter it. And we know from talking to many, many women who've been out fundraising, and maybe Patricia can talk a little bit to her experience, that sometimes you come out of the room and you know in your gut that what happened in that room was probably not exactly what happened with the male co-founder or someone else's experience. And the way that I think about preparing for that is you have two jobs when you come in to meet me. You have to grab me, especially at the early stages, with the story, but then you also have to grab me by my greedy little heart, right? The way that you're going to make money, the way that the investor is going to make a lot of money with this. And so it's a very important thing as you're positioning yourself that we know the value and importance of responsible AI, but you have to really, like Patricia said, focus on the place where customers have a burning need and tell me that story, right? Then I would just say in terms of strategies, it's probably very important to talk to other female founders. and talk to other founders generally, but also to other female founders, because one of the things that sometimes happens is we get socialized to come so much more prepared to the game, right? We've been taught that we have to have all the answers and be ready and be better than everyone else. And as a result, we often are. But it also means that sometimes we do two things. We either undersell ourselves, right? Or the opportunity, because we're more pragmatic about what's realistic. Or two, so you have to paint that big vision. But you also have to be careful when they start asking risk-based questions, not to go to the, I know all the answers, and just find yourself winding down the rat hole of the risk-based question, which we all know we've been in those situations. Instead, answer briefly, answer concisely, and then get back to your core message about the vision and what you really want to talk about. That's absolutely critical. And it may take working with other founders to practice.
Okay, perfect. Great advice, Jennifer.
Yeah.
Patricia, and your lovely cat. So let's talk more about the responsible tech side. We know that it is starting to emerge a lot more on mainstream, and awareness is growing about a lot of the missteps that are happening both in ad tech, Facebook, Instagram, Google. So let's talk about your successful raise. Like, what was it that propelled investors to actually take a chance on you? And also talk about the challenges that it took you to get here.
Sure. We launched our MVP right before COVID started. So all of the initial conversations that we had with potential customers kind of died during that time. So we decided to double down and focus more on product, and ended up raising our pre-seed round in June or July of 2020. It was fairly tough, but COVID actually made it a little bit easier because we didn't have the money to go travel around in Silicon Valley and raise the way that you were expected to pre-COVID. So we ended up getting the money from investors who we only met in person years later. But the main challenge for me when choosing our very early investors was gauging their ethics, because our technology can be used for surveillance, and the roadmap that we have is also very much a roadmap that includes products that could be used for surveillance. So every investor that we take onto our cap table, we have to vet as well as we possibly can to make sure that they won't force us to go down that route. And it's a very tempting route because that's multiple millions of dollars. In raising the seed, which we started raising, I believe, in April of 2021, and the money hit the bank in September of 2021. We actually assigned the term sheet in May, so due diligence does take a while, especially with in the summer when some venture capitalists are out on vacation, for example. So you have to take that into account to make sure you don't run out of money. In raising that seed, I think I talked probably around 50, if not 60 investors in order to find the right lead. Ended up getting 5 term sheets from that process. And choosing, once again, the partner there was also a very careful consideration. Who would have the best name in the privacy space, who would not force us to go towards surveillance. And really grateful for the partners that we ended up choosing. So M12 Microsoft Venture Fund is the one who ended up co-leading the round with Forum Ventures, which is a B2B SaaS accelerator that's based out of Toronto, New York, and Silicon Valley. And I couldn't have asked for better partners. Some of the challenges, yes, there were some cases where, for example, it was pretty noticeable that the female partners' opinions in some funds did not matter as much as the male partners' opinions. And the female partners, when in one such case, was actually very excited about us, but the deal did not move forward because they just did not take her opinion into consideration. There were situations where it's just people don't believe in privacy as a space yet. some people will ask some crazy questions about, your tool clearly doesn't work because I put in this random word and it didn't pick it up with any context. But if you told that word to any human, they would also not know what it is. So it's ultimately digging through piles and piles of people who are not going to be good partners for you and getting to those gems who really believe in you, who are going to stand by you, and you really need them to stand by you for years on end. One thing I'm very hesitant of is when people show too much excitement at first, because that excitement, if it's not based on a solid foundation, might not last. I very much look for that buildup of excitement.
Okay, perfect.
I love that advice about the buildup of excitement, if you don't mind me jumping in here.
Yeah, go for it.
One of the big challenges when you're a first-time funder is the listening with happy ears, like that every lean in means a yes, when really sometimes that lean in is the excitement that you're doing it, but it's really not a fit. And then you get the very soft no, and it's still a no. In my case, I try to help everyone I can, but be upfront about if it's not going to be a fit for our fund, or if I'm not in the capacity to where I have capital to invest. And I also think, Patricia, I want to chime in on the part where you got so real about there are kind of two phenomena that happen sometimes with female founders. A lot of them are, or female investors, some of them are more junior to their funds. If they're not the principal or the partner in the fund, they may have a more difficult time championing the deal. So being aware, that's true also with sometimes associates, not always, but being aware of who you're talking to and how you're networking to the decision maker, just like you would in an enterprise client, super important. And then vetting them that you're going to be with them for today. It's a 10-year journey. So you want to be really, really aware and aligned.
Yeah. A lot of, I want to add to that. In certain cases, you might hear people say, ask to talk directly to the partner rather than to the associate. I would caution very much against that. Actually, I would very much recommend against that because for many reasons. One, you can gauge a lot about a firm based on the associates they choose.
That's true.
These associates actually end up being champions for you. And afterwards, when the round closes, they're actually going to work very closely with you and going to help you a lot. I've become friends with some of the associates in the firms who funded us, and they've been pushing clients towards us and intros to VCs towards us. And they were part of the team that really pushed for the investments to be made within our company. So
it really depends a lot on the culture of the firm. But I think you're right, because they're going to be the next generation of partners, whether they stay with that firm or spin out. So it's not saying don't ignore them, but also you have to be tracking your progress, that you are eventually getting to the person and getting the support you need for the decision, right, from the decision maker. You said another thing that I think was really, really interesting, and I have to just get it back. That was about, it touched for me on the part of when you have that support and you have the strong lean in of who you want, that reflects, Hessie, in that question about valuation, right? Mm-hmm. Because we have seen the place where women sort of get all that lean in and then they get the little girl valuation versus what the men are getting.
Exactly.
But I think if you're finding the right relationship, like Patricia is talking about, and the more you sort of own your process and your networking and your thoughtfulness that about who you go after, right? She took 50 or 60 meetings, but really deliberately these partners for these associates for this reason, right? That vetting gives you more management and more control, and you're owning your process. And when you own that, you build the momentum. Mm-hmm. Versus a lot of times women get advice like, well, just go find the lead. No, you've got to drive all the carts together and the lead will emerge from that momentum.
Okay. So, but Jennifer, let me turn it to you because you're on the investor side. And I think there is a responsibility for investors in this emerging space, investing in companies that don't turn out to be, let's say, opportunistic, or are not seeing the fact that, let's say, at some point, Patricia's technology may become a surveillance technology if they're not careful, right? Investors can't turn a blind eye to the human impact in favor of profit anymore. Is that what you believe? Or tell me what your thoughts are on that.
What I believe is that they cannot and should not be turning a blind eye. We have this issue in AI and responsible AI. You can see it also in the people who are investing in climate. But I also will say that the culture and structure of funds is still pretty rigorous and traditional, aligned with not stakeholder capitalism, but just straight up the capitalism where the firm and the stockholder return is dominant. Right.
Absolutely.
And the challenge then becomes, how do you balance that part of what do you owe to your LPs? And remember that LPs, they're not these big evil things. They're like TIAA CREF, all the pensions of all the teachers across California, right? So this part is important because you're the returns for people's retirement, right?
Yeah.
But I think we know from data and experience that companies that think responsibly, that have diversity on their boards, that take forward-looking action aligned with their values, have better returns. And that's the part that I think people shouldn't miss here, that this is not, oh, I'm going to make a flavor of the year bet on, we should have explainability. We should have some synthetic data, which is what's happening in most funds. This is if AI is going to fulfill its potential, all of these sets of applications are going to come along with it. And you should be thinking about them as a sector in themselves, and you should be investing to support the sector. That's how I think about it. And when you do that, you're doing it with your values on. But the last thought, the days of sort of ethics in VC and that conversation, we're at the very, very beginning with work like Johan Leonard's work and Susan Whitehouse, who had come from the Kennedy School, just starting to really have that conversation again.
Okay, perfect. So Patricia, so you work in a space that's very much, I'm not sure if there's a dependence, but there definitely needs to be some kind of supportive legislation. And can you talk about that as is it either a crutch for you as a company that is very much in this privacy space that's emerging, and how does that play into how you become successful as a company?
It is, while it's useful, I don't think it's necessarily the only mover. There is more and more of a recognition that privacy is really important in order to maintain your customer trust. And Facebook or Meta had the largest drop in stock market history this year because of that loss of customer trust. And now they're trying to build an entire new brand that is going to require a lot of customer trust. So there's this starting to be a recognition that this is something that people should care about regardless of legislation. Now, legislation does help a lot in that it's something for companies to point to for their budgets, for example. It helps a lot in that it gives some guidance as to what companies should be looking at when it comes to privacy. And in getting that stamp of approval from a regulator eventually saying these guys are GDPR compliant or these guys are HIPAA compliant, that can open a lot of doors for companies doing business with other companies, for example. But aside from regulations, there are still contractual obligations that are not necessarily driven by regulations that prevent companies from sharing PII from one company to a third party. For example, if you're using a vendor, you can't then have that vendor go share your data with AWS Comprehend. And I think these all play a role, but one thing that legislation really, really helped with was putting privacy in the public eye and getting people to understand what kind of rights they have. And I think that's driven adoption of our technology much more than regulation itself has.
Okay, perfect. Thank you. Okay, so we have time for one more question, and I'm going to pose the same one to both of you. Where do you both see the tide turning for both investors and startup founders in the next decade? So I'll start with Jennifer.
So where do I see the tide turning? I think we are headed into this age of smart software, and that if we're going to adopt that age, you know, the reason I started working on AI and AI trust was because I was thinking about how do we get off the treadmill of our cell phones into comm devices that are cushions and not crutches, right? Not hamster wheels. And the only way we do that is with smarter technology that elevates humans. So having human-centered thinking about AI first and about privacy is key, right? I strongly agree with Patricia that people who are working with this data all the time, where it's a core fundamental part of their business, they actually already understand these issues and they know the needs. And they know that in the US, the existing regulatory frameworks that we have, all the major organizations from FTC to FDA to the Fed to the SEC have said, we know that we have regulation against discrimination, against surveillance, and we will enforce that. So it's the time now for organizations to step up to the plate, but it will be driven first by the adopters who are working with it every day. So as a founder, go and find the people with the pain.
Perfect. Okay, Patricia, and I want you to answer the same question, but also provide your advice to young startup founders who actually want to develop within this responsible tech category.
Okay, I'll answer that question first because it's easier than where we're headed. So one thing to keep in mind, as Jennifer mentioned, do keep that pain in mind. What pain are you trying to solve? But also make sure that it's a very generalizable solution that you're building. One pitfall that both privacy technologies and AI companies often fall into is that you can essentially become a consulting company, because a lot of technologies can be built for one or two use cases, but you need to adapt it every time that you are addressing a new customer. So the generalizability of it, if you are building products that require customer data, make sure you can then use that customer data for other customers as well. One AI company that got pretty big, but in terms of funding, but not in terms of progress, their problem was that they were relying on customer data to build their models, and then the customers said, what do you mean you want to use this data for other people, to train models for other people? These are our models now. So be careful of that. Own the data that you're training your models with, and talk to a lot of people about your idea. I wouldn't worry about what if somebody's going to steal your idea. It's really about execution, not about the idea. And it's something that you're going to have to iterate on over and over again. So create a hypothesis, talk to people about it, keep notes in a spreadsheet about each person that you talk to. I talked to about 70 people before jumping into the second version of private AI. And keep an open mind about it and change the questions that you ask the same people as you discover new things. And ultimately, it's about building a product around a pain that you hear over and over again.
I love that you said you talked to 70 people to do this, because this is the core customer discovery, that segmentation and getting out. And there's a question in our Q&A here about social impact, navigating the sort of social needs versus the social good versus making profit. If you're raising from investors, even angel investors who may have an impact agenda, the key is to understand what they value, right? And what the balance is of what you need to show for impact, as well as what you need to show for return. But if you're building a company and you are taking money from someone, that's not grant non-dilutive funding, then you've got to think about profit. So you absolutely have to do what Patricia has just said. She learned from first startup to second startup.
Exactly.
Right? 70 customer discovery interviews that are not with your other friends in responsible AI, but are with the potential users.